Are we recording?
Yes, we are. Let's get started.
All right, let's do it. So, hello everybody, and welcome to a new episode. So, today we have a very special guest, extremely special because Roger here has helped us immensely in our group. So, him with Access Silicon Valley and Procopio has helped multiple startups. Hold on, let me turn off the ringer on my phone. Anyways, he has helped multiple startups in giving them advice, and he also hosts workshops here in Palo Alto at the Procopio office. He's been a wonderful steward and helper for the Generative AI Meetup group, and So, anyways. Roger, welcome, and welcome to the podcast. So I give it a short little introduction, but would you be able to tell us a little bit about yourself?
Yeah, sure. Thanks for having me. Number one, I feel honored having seen you guys take this from sort of ideation through what has become probably the preeminent group on the peninsula. So kudos to you guys for starting this and really growing it to something that I think people really get an immense amount of knowledge from. And anyway, so about myself, I am a recovering entrepreneur. I was an entrepreneur for 10 years, and I can honestly say I probably made every mistake in the book. And after 10 years of blood, sweat, and tears, I had an exit that really wasn't commensurate with or relative to the blood, sweat, and tears that I put into it. But I went back to South Africa, kicked back on the beach for a couple of years, and met my wife who said that she couldn't take a beach bum home to meet her parents. So I went back to law school, and it was an amazing time in South Africa. Mandela had just been released, first free and fair elections, and but I always knew I was coming back to America, came back to law school here, and ended up in Palo Alto in 1997, which was right at the beginning of the bubble. And that was an amazing time here. And
that's a great time.
Yeah, and that was an amazing time until 2001, which is when I bought my house right at the top of the market. But that's another story. Buy high, sell low. That really was my passion, having done a startup and being here in Palo Alto at the beginning of what was a really incredible time. And that's been where I've focused my time and my effort. I head up Procopio's emerging growth and venture capital practice group. So I deal with startups right from inception all the way through multiple rounds of funding and ultimately exit, which is what everybody hopes for. And 99.9% of the time it's by acquisition, but there are the IPOs and then everything in between. And that's why I really love working with startups, because you never know from day to day what crisis you're going to be working on. That's the life of a startup.
So you mentioned you were an entrepreneur in your past life. What role did you fill in your startups?
So chief cook and bottle washer. With most startups, you're doing sales, you're doing finance, and ultimately, I grew it to where we had people that were doing things, and I didn't have to do all the hiring and firing. I made the rule: you hire, you fire, because that was the worst part of the job. But in the beginning, it was just me and sitting in an apartment with no furniture, eating ramen noodles at night. It really was the way it is with most startups that start today, that are really bootstrapping.
You mentioned that was before 97, so that must have been pre-internet.
Yeah, that was prehistoric.
What was the ecosystem like back then?
Pre-internet, pre-electricity.
Yeah. What was the startup ecosystem like back then?
I did it in Houston, and there really was no real ecosystem, which is why when I became a lawyer, I really wanted to firstly try and save entrepreneurs from themselves, one entrepreneur at a time, just from the mistakes that I made. But also was to try and create an ecosystem for people outside of Silicon Valley. Because I think we just take it for granted. This event tonight, there may be 10 or 15 other events, not necessarily Gen AI, but for startups that are really useful. Outside of Silicon Valley, it just doesn't exist. And so what I've tried to do with Access Silicon Valley, you mentioned that in your intro, I started this about 10 years ago, recognizing that outside of Silicon Valley, there really isn't a community that people could get access to the kind of information we take for granted in Silicon Valley. And so I created Access Silicon Valley to provide access to the best and brightest VCs, been there, done it entrepreneurs, and experts, so that folks could, suck up that knowledge and become sort of part of the Silicon Valley mindshare, even though they may be in Kuala Lumpur or Duluth or New York, even though everybody in those areas thinks that it's Silicon Valley, it really isn't. The velocity and the talent here is just unmatched, from anywhere else in the country.
Yeah, I have noticed, like you mentioned, most people have this vision of Silicon Valley as the cutting edge, at the forefront of all this new technology. But post-COVID, in this remote work world, I think a lot of organizations and VCs are trying to spread the message to other countries and try to open up meetup groups like this one in other places to try to get founders from every other nook and cranny of the world to get access to the knowledge that we have here.
Yeah, no, absolutely. And there is amazing talent outside of Silicon Valley, and there are amazing companies and ideas that are born outside of Silicon Valley. But I think what makes Silicon Valley so unique from LA or Boston or New York, is that the ecosystem is so well developed with so many serial fill in the blank CEOs, CMOs, CFOs, that people that have been there, done it so many times, and that kind of feeds on itself. It's kind of a sickness. You put your blood, sweat, and tears into a company. You spend 10 years, you exit, and then 3 months later you start another company. And it's just that velocity and that pool of talent, which I think is so unique to Silicon Valley because they've been doing it for so long, and you have so many serials, and they become mentors, and they become new CEOs, and they become, if they were a technical founder, maybe they're doing a startup as a CEO. I've got a number of clients that have transitioned from technical founder to, in the new company's, business CEO founder, which is just unusual outside of Silicon Valley to have that many serials, which does affect the trajectory of the company, whether it's, ease of getting funding. If you've done it before, you've mitigated the risk on the execution front from an investor because you've got a team that's serial. And so funding becomes easier, and then it becomes easier to attract talent. And so the cycle is just, self-perpetuating, where it's just more difficult outside of Silicon Valley.
Yeah, I think that's really true. Just one thing about just Silicon Valley in general is, the environment here is just like, as you mentioned, just like nothing else on earth. Like when I moved here back in 2015, I was just like blown away by how many people are like programmers working on startups. You just drive around up and down the 101 and you see all these big names of the signs and billboards of just all the huge companies. So just Silicon Valley is like, there's nowhere else on earth quite like it. It's cool. So
the velocity I think is so different. I was looking in San Diego for AI groups.
Yeah,
there isn't one. When you think about San Francisco, there's a ton of them. You guys dominate the South Bay. But for a city the size of San Diego not to have an AI meetup group, it's just kind of crazy.
Yeah, I think I've seen AI lumped under general tech. But I think now, since like November of 2022, it warrants a specified group just for AI and generative AI, LLMs, diffusion models. And we've met a couple of members in our group who've come from other states, other countries, And they've talked to us about opening something similar from where they're from, in Miami, in Austin, in Germany. So it's definitely something that people have a need for. But like you said, the concentration that we find here in Silicon Valley of engineers, entrepreneurs, people enthusiastic about cutting edge tech is unparalleled.
Yeah, I don't know of any city where even if you did have a meetup group just like this, where you would get 80 or 100 people, coming to an event. I just don't know whether there are 100 people that focused and have that same interest that you guys have here.
I also think this specific point in time. So you mentioned you were starting your legal career, at the start of the internet boom. Do you see any parallels between that and what we're going through now?
So there are some parallels. The internet was kind of new, and it kind of felt like the Wild West. But there it was all about user acquisition. It was about eyeballs. It was, whatever you could do to attract eyeballs. It didn't matter about profitability. It really didn't matter about the unit economics. It just meant about attracting users. And that, I think when the bust happened, it really was a function of, you cannot continue to operate a business that doesn't have sound business principles, getting to cash flow, break even. And I think the parallel I see, and especially when GPT was launched, there was like this gold rush. It felt like the Wild West again. But I think the difference was with Gen AI, and even though AI is nothing new, we've talked for years and had clients in ML and DL, but this was something new. And I remember the first time, it was like a day after OpenAI launched GPT, and I tried it, and I went like, wow, this is going to be transformative for me. I mean, this is not from an exploration perspective, because I really don't use Gen AI for exploration. As a lawyer, you have to know the answer that you're looking for. You don't want to rely on GPT to give you an answer. But, for stuff that I do, which it can help accelerate what I'm doing in terms of the speed, time, and efficiency, that's amazing. And I just felt like this was going to be transformative. It was going to transform our marketing department. It was going to transform the way I did Access Silicon Valley and events and writing blurbs for Meetup and for Eventbrite. And it really has borne that out. But I think the difference between 2001 and 23 was this is transformative. This is transforming the way companies are doing business. People are just going to operate. And it's affecting the basic business fundamentals of companies.
Yeah, I think that's really true. I mean, while the internet, obviously is huge and transformative and is like literally changed the world, I don't know, to me, like generative AI, it feels like bigger and more important, especially because in a certain sense, it's not like the internet enabled everybody to communicate and publish things for essentially zero, right? So everybody was able to have a voice. But with generative AI, it's going to be so like everybody on their phone is going to have like a brain. And this, I think, soon will surpass like the capabilities of the human brain. And I don't know like if we can like truly predict what that will look like, but the world in 10 years is going to be a lot different.
Yeah.
Things are going to get weird.
I mean, especially if you think about neural networks and the potential there, I mean, if you could have a thought process like a brain with this amazing neural network, it just is sort of incomprehensible to me what this is going to look like. But, got a client that's building a self-aware robot. Wow. And, I can't wait to see what this looks like, because I think that's going to be part of our future.
I think especially a couple years down the line, as this technology keeps getting better, the hardware keeps getting cheaper, and the amount of funding being poured into these startups keeps like exponentially growing, with the numbers reaching not like billions or tens, I think hundreds of billions, if not trillions.
And the funding environment has, 23 was hard. I think after 22, there was this sort of gold rush for Gen AI. And I don't know how many clients I had call me up and ask me, what would it take to change the name of the company from XYZ to XYZ.ai? And that would attract funding. I had to break it to them that wasn't the case. But there was a lot of money that very early on got thrown at anything Gen AI. And I think investors have become a lot more discerning. Just because you hook up an API to OpenAI does not mean you're an AI company. And there's a difference between AI first and incorporating some component of AI, which most of my clients at this point are doing. And so I think the funding landscape is going to level out. This year, it seems like, from my perspective, just anecdotally, this year has been probably 2 or 3x in terms of funding is what it was the same period last year. And so I think this is going to be an incredible year for funding of startups. Especially those startups that have got decent KPIs or unit economics, even though it may be on a small scale. It just seems like the funding floodgates have opened for early stage companies.
I'm curious what kind of startups you're seeing getting funded. So one popular thought is, in a gold rush, build shovels, build infrastructure, build tools that allow you to create synthetic data, hosting, scaling. Have you seen mostly these kinds of infrastructure plays or domain experts incorporating Gen AI into what they're good at already?
So, I kind of see clients in 2 buckets. Those that are AI first, that are building LLMs. Building LLMs for fine-tuning in particular verticals, whether it's financial or, different verticals. And then those that are incorporating, Gen AI into their product offerings. But I do agree. I think a lot of the shovels are getting funded, and we had a panel a few months ago where I asked the question, where are the winners? What's the low-hanging fruit? And this guy said the arms dealers. And these companies, that are building these shovels are the arms dealers. And he was saying, look,
NVIDIA being the biggest one.
Yeah, that's true.
And he was saying, look, if you can, he came from large enterprise, and he was saying, look, our biggest pains are compute power, at everything that goes along with that. If you can help us solve any of these problems, we're not asking you to build our LLMs for us. We're asking you to solve the problems that we have. If you can help us fine tune better, if you can help us, with the compute power or whatever, we're going to buy you. We're going to fund you, and then we're going to buy you.
Are there any interesting companies or examples that you can talk about?
Not really. There's this thing called confidentiality, and a lot of them are in stealth.
Okay.
And so can't really talk about the technology. I invited a few of them tonight to talk. I don't know if they will or won't, but I think people feel reticent. Some people, that are on that path and building something to get funded at this point, just because there's a lot of people doing a lot of things that kind of want to maintain and stealth.
That's understandable.
Yeah. For sure. So one thing that I would kind of want to ask about is what, and you kind of touched on this earlier, but at what stage do you think a startup would be able to start reaching out to you and asking for your advice to help with things like setting up the business? I don't exactly know, founding documents,
funding.
If you're a startup that's a solo person, or maybe 2 guys, maybe they haven't got any money yet, would that be too early to come reach out to you, or do you typically work with companies a little bit bigger?
No, so I like to start with companies at the earliest stage, because my goals and objectives early on are to set them up in such a way that they are absolutely well positioned for funding, and that starts with step 1. So it's having the right entity incorporated in the right state, with the right split between the founders, the right vesting schedule. So there's a lot of strategy at the very early stages in setting up a company so that when an investor 6 months, 12 months, 18 months, 3 months, pulls that bow and the startup pops up, it's just a check. And, it's not something that you can get from Stripe or from Cloaky because there's no strategy. There's just, you fill out a form and it just spits out documents. And so often what I've got to do is go into cleanup mode with my shovel, behind what's being done to fix things. There aren't enough shares authorized or the pool's too big. And so, a lot of founders think, oh, I'm just going to wait until I get funding and then I'm going to start my company and then I'll have money. I try and make my service really affordable with a very, very reasonable startup package so that they get everything that they need right off the bat. And they know that it will pass muster. When I've got clients going into YC and YC sends off their due diligence request list for documents, within 10 minutes, they've got access to a data room that's been built from day one. Everything is in there. And same thing with investors. So I used to say to my employees when I was an entrepreneur, if you take care of the small things, I have confidence you'll take care of the big things. If you don't take care of the small things, I have zero confidence you'll take care of the big things. And that's the way I think investors feel as well, or even people that you're bringing on. If you're in a competitive hiring environment and you bring on a co-founder and co-founder says, hey, can I see the offer letter? Can I see the plan? And you go, well, we haven't really formed the company yet. It's like, I angel invest and I get, companies reaching out to me and saying, hey, we'd love you to take a look at this. And I go, great, tell me about your structure. And they go, well, we're at Wyoming LLC. I go, okay. In my mind, I'm thinking, if you just spend 3 minutes, forget GBT, if you just spend 3 minutes on Google and just said, what entities will VCs invest in and which won't they invest in? It will tell you Delaware C Corp.
It's always Delaware.
And it's a C Corp, notwithstanding Elon's move to Texas. It's always Delaware C Corp, and for a variety of reasons. But if you don't look like you understand the ecosystem, from my perspective, it looks like there's going to be execution risks on multiple fronts if you haven't even taken the time to really do the basics. And I think one of the basics is you have to get a startup lawyer early. If you wait to get your company set up before you get funded, is a huge potential tax issue, getting your shares on the eve of funding. And, I think in my startup, I knew that I didn't know anything. And so I just tried to put people around me that knew, or at least I thought knew what I didn't know. And I think it's really, really crucial from day one to have really good startup advice.
Here's a kind of a hardball question, maybe.
Okay.
Can this role be automated? Because you mentioned these startup founders go and use some stock templates.
Yeah.
Maybe that's not sufficient, but if there's an LLM that can talk to you, understand what stage of the process you're at and where you're located, and give you suggestions.
So maybe I'll give you the lawyer's answer. It depends, right? So there are so many things, and I think where I'm different is just because I had a different experience as an entrepreneur. And I say to my clients, do not be a slave to convention, right? You have to think about your startup, what's appropriate for your startup. So just for example, like an option pool, right? I always say to the folks that come to my workshops, how big should your option pool be? And people go 15%, 20%, 25%. And I go, why? That's what most people do. And so they do it because most people do it. But the reality is that when you go out for funding, you've only got two negotiating levers. One is the pre-money valuation, and the other is the size of your option pool. If you have a really big pool, you've lost a negotiating lever. And so I don't know how you'd automate that, because it's all based on a discussion, intuition, building a model, and maybe you could get there, but when we look at what size of pool we're going to have, it's a discussion about a value inflection point, which is going to need to be achieved for funding. How much money is going to be needed to get there? How many people and what people are we going to have to hire with those use of proceeds? And what kind of equity comp are we going to give so that we can build out? The first step is how big should our pool be? And so maybe it could be automated. I mean, you guys are brilliant. You could probably write some code and do that.
I think you have all the data, though.
That's true.
Yeah, but there's so many different variables depending on the industry, depending on the timeline to funding, and often it takes a discussion with a founder to elicit information to be able to draw on those variables to give them the right answer. And like I said, you guys are probably smart enough to write something, if you had enough data. But it just seems like so often the answer is different, because I really try and get my entrepreneurs to think about their companies differently to what's the convention. So it's a long answer to maybe.
No, I think that makes perfect sense. You mentioned, maybe to paraphrase, not to follow conventions set by other people, because it may not apply to your specific situation.
Yeah.
And another thing that maybe I remember something that these accelerators drilled into me when I was going through their startup accelerators was, you always think about the next milestone when you think about fundraising or hiring employees. Why are you hiring these employees? Why are you raising money? Is to get to that next milestone, finding product market fit, or getting cash flow positive, or reaching a certain market penetration threshold or something. So you think about those milestones and then work backwards to figure out how much money you need and how
that's
how many
exactly
people you
it.
hire.
And I'm doing a funding strategy workshop in a couple of weeks. The goal is, and as I'm advising my clients, is to identify the inflection point. And one of the hard things is for them to really understand what that inflection point is. Because what you always want to be doing is raising money at a much higher valuation. And so you have to understand what the inflection point is that will get you a higher valuation. So, I'll have clients say, I'm raising $500,000. And I go, why? And they say, we want to build the product. I go, well, that's great. But if we go out fundraising, people are going to say, what have you raised? We're going to say 500. And they're going to say, what do you have? And we're going to say, a product. And they're going to say, we can't fund you on that, right? Because you haven't validated your hypothesis. You haven't demonstrated market fit. There's no unit economics. There's no KPIs. So the identifying the milestone as not being, developing the product, but it's developing the product and getting some level of traction, some level of market fit, so that you can really show the dogs will eat the dog food. And I've seen so many companies build big, beautiful products that no one wants. And so if you don't get beyond just having a pretty product, you're not going to be fundable. And so really understanding, and this is where I think it would be hard to do this, with AI and automate the process. It's really helping the founder understand what that inflection point is, and then building a model, from the bottom up, inside out, to support, what it's going to take in terms of funding to get to that inflection point. Mm-hmm. So when a founder comes to me and is looking for funding and says, we're raising 500, I go like, that's really weird. Like, everybody's inflection point costs 500 to get from here to there. Like, show me the model why it is 500. And then it's like, well, I figured that's kind of what a pre-seed is. And that's just the wrong answer. And when I invest, I really have to see a model, and it has to be a believable model based on sound assumptions to get to an inflection point. If you're going to go for a Series A, if your inflection point is a Series A, you have to have a scalable, predictable business model. with unit economics and KPIs, if it's a SaaS play, that are sort of the typical SaaS metrics.
I've also been hearing that the newer companies that are being started in the last year or so are considerably smaller than the companies that came beforehand, because they don't need to hire as many personnel. A lot of these tasks can be automated, whether it's engineering, design, marketing especially. Have you seen the team size shrink at all?
Not really, because most of my companies that I work with, they start off very, very lean. There's maybe a couple of co-founders, maybe 3 or 4 co-founders if it's a big group, but very often people come together with really complementary skill sets. You'll find someone that's product, you'll find someone that's business, someone technical, and it's a really well-rounded team, people who have come together. If they've all got the same skill sets, that's kind of useless. And yes, I think as they start to scale, they're not scaling as big as companies would have, with a seed or a pre-seed or even a Series A. What I have found for companies that are that have closed on Series A is that there is much more focus on sales, and there are efficiencies because of AI in marketing and even in development.
Yeah. So we're almost about out of time. Roger, is there anything that you'd like to mention that we didn't ask you about? I know we could probably talk for another 2 hours. I feel like we might have to do this again. But anyways.
Or maybe anything you'd like to plug, let people know about Access Silicon Valley.
Yeah, I wish I had more time for Access Silicon Valley. If you look at the website, it is so kludgy. It's WordPress. I'm not you guys, right? I'm not technical. So whenever I touch anything, even if it's just to do an update for a plugin, it blows up. So I wish that I had more technical chops. I wish I had the time to really get in there and build a big, beautiful website that, right now, my goal is to provide content for people so that they can actually, go on there and watch these firesides with VCs. And it's not all sexy stuff, what's hot, what's not, who's funding, who's not. It's really tell us from an investor's perspective what turns you on, what turns you off. Real advice. We've got Barry Eggers, co-founder of Lightspeed, coming in next week. And really, I want him to be in the weeds, helping entrepreneurs really understand, because I think so many entrepreneurs have the entrepreneur hat on and they just can't switch hats and look at their company from an investor's perspective. There are technological risks, there are sustainability risks, there are execution risks. And how does your company, from an investor's perspective, stack up against the 40 other deals they've got on their desk? And so that's kind of the goal and objective. But yeah, my passion is startups, and I really enjoy working with really smart people doing really cool things. So.
Well, I really appreciate you taking what little time you have to talk about the funding landscape and some of the legal issues that startups face. I'll make sure to put some of the links to Access Silicon Valley and Procopio Law offices in the show notes.
But yeah.
Excellent. Thank you.
With that being said, thanks, Roger, for everything you do for the group.
Honestly,
without you, I think the group would not be where it is now. So.
I completely agree. I think we've talked about this before, but Roger reached out before the group had its first event, and he's like, "Hey, you guys want to host your event at Procopio?" And I was like, "What is Procopio?" And, we haven't even hosted an event, and fast forward a couple of years, a couple months,
about a year, a couple months. So.
I looked at what you guys are doing, and I said, this is amazing. I want to be a part of this. This is going to be big. Yeah. And I wasn't wrong. You guys have just really attracted, the format attracts people, the, who you guys are and who you get as speakers. It really is phenomenal. We have nothing to do with that. You guys have just built something amazing.
On that note, let's get ready for our next event.
Yeah. All right.
Yeah. Thank you so much, Roger.
You're welcome. Thanks, guys.